As we come into 2019, our expectations are this will be a much better year than 2018. While we think the first part is going to remain challenging, it is likely going to set up for one of the best buying opportunities that we've seen since March of 2009. Let's start with a little background. December 2018 was the worst December for stock market returns since 1931. We put in a low in the latter part of the month, and since then we've begun to rally. It's likely at some point in time over the next several weeks or a couple of months, we'll retest those lows that we saw back in December. It's going to be important to see how we come through that, but from an economic point of view, the U.S. economy remains on good footing, and it's likely that this is simply going to set up a buying opportunity for us in the second half of the year. In order to understand what's happening, it's important maybe to take a step back and look at the broader economy and see what's really driving things. What we've seen is that there's been a pretty significant slowdown economically on a global basis. A lot of that is demand driven. We're sort of, if you will, in between cycles where old technology is not really that interesting anymore, and there are things coming down the pike, for example 5G, that are going to be transformative. What you're going to see, I think, as we go into the latter half of 2019 is this reemergence of this demand cycle for all sorts of goods and services. It's likely going to affect technology companies across the board. It's going to affect healthcare companies across the board, and it'll affect industries you would have never thought of. For example, farming, mining, engineering. So what we see right now is sort of an in-between demand cycle slowdown, but as we come out the back end, we see tremendous growth in areas that are going to generate new opportunities for investors. So to kind of summarize, if you look at your portfolios today, you have a large short-term treasury position, you have a large cash position, and you have a large gold hedge to offset any volatility that we may see over the next couple of months. And we think we may see some volatility over the next couple of months. We would expect to see a retest of the December lows at the least. But coming out the back of this, one of the things that we have is buying power. And we have the advantage that we can take advantage of what we think are going to be some absolutely transformative opportunities in healthcare, technology, engineering, mining, agriculture, that we see are really going to drive the economy, drive markets as we get into the latter part of 2019 and into 20.